Are we headed towards another foreclosure crisis in Colorado? Well, if you've been reading the headlines lately, you may have seen some pretty unsettling reports that mortgage delinquencies and foreclosure filings are increasing. Well, should we be worried about the possibility of another housing bubble that's about to burst? The short answer is not really, but there are for sure some trends that are worth paying attention to. But let's start by talking about what mortgage delinquency actually is. A delinquency simply means that homeowners missed a mortgage payment. That could mean that they're 30 days late, which might indicate a simple, easy to correct problem or temporary financial setback. We look more closely at those who are seriously delinquent at more than 90 days behind, which is a better indicator of imminent foreclosure. Nationally, mortgage delinquencies have been rising over the past year, and recently it reached its highest level in about 4 years. Now, before anyone panics, let's put that into perspective because we are nowhere near the levels we saw during the housing crash of 2008. First of all, back then, millions of homeowners had little or no equity. The lending standards were loosey-goosey, and many borrowers had adjustable rate mortgages that suddenly adjusted and became completely unaffordable. Today's market is very different. Most Colorado homeowners have significant equity in their homes. Most mortgages are fixed rate loans, and lending standards over the past decade have been much more conservative. So why are delinquencies increasing then? The answer is affordability. And this is the really fascinating part. The biggest increase is happening among newer homeowners, particularly FHA borrowers and many first-time buyers. It's so sad. These are people who purchased when home prices were high, mortgage rates were elevated, and their monthly payments already stretched their budgets. Now add in higher insurance premium, higher property taxes, inflation, skyrocketing gas prices, and everyday living expenses. And some households, they're just feeling too much pressure. Here in Colorado, foreclosure starts have increased compared to last year, but that doesn't automatically mean that we're rushing towards a housing crash. In fact, the most important number to watch isn't foreclosure filings. It's those serious delinquencies. Those are the homeowners that are more than 90 days behind on their mortgage. That's the number that gives us a clear picture of where the market may be heading. And right now, while delinquencies are rising, the overall data still points towards a market that's experiencing, yes, stress in some areas, but not a widespread crisis. So what does that mean if you're a homeowner? Well, first of all, from my heart, if you're struggling, don't wait. Reach out to your lender as soon as possible. Most lenders will have options available long before foreclosure becomes a reality for you. And if you're a buyer or a seller and you're watching the market and waiting, you have to understand that rising delinquencies do not automatically translate into falling home prices as much as you wish they did. Colorado still has strong homeowner equity, limited inventory in some areas, and continued buyer demand. So the bottom line, mortgage delinquencies, yes, they are increasing, but Colorado is not showing signs of another 2008. What we're seeing is affordability stress, not a foreclosure wave. And that is a very important difference.